what I was talking about in the last class was we're dealing with market structure, how to understand the chart that looks so irregular and so cumbersome. So a quick recap of what we did in the last class. We're talking about how to know if it is an uptrend, a downtrend, or a consolidation. And then we said one of the quickest way to know if it's an uptrend or a downtrend is to pull up a 20 EMA or any EMA that works for you. And EMA, by EMA, I mean exponential moving averages that works for you, and see if prices above the EMA or below the EMA. And then after doing that, I was also able to point out some caution about the use of EMA, citing different examples of where the trend is obviously tired and then it's ready to turn, whereas the EMA is still telling us that it's an uptrend or a downtrend, as its case, as different case may be. So in this particular class, I want to deal with the a deeper level of the market structure. Now, to get that done, I need you to pay so much, huge attention here, because I need you to understand as I, explain what I need to explain tonight. One thing is very simple with um, the idea of getting to know how markets move. For example, for us to have a successful downtrend, let me use what we have here as an example. For us to have a successful downtrend, like I said, markets move in waves. So what does that mean? It means market does not just go up or go down. It moves in waves, up and down, up and down, up and down, and it will continue in that direction it wants to go. So even though this is not a perfect representation of what I need to do, but let me still use that. Now, look at this. Okay, let me start with an uptrend and let me use this. Look at this. This is a visible low in the market. I believe you will agree with me with that. This is a very visible low in the market. So let me try and label it and see if we can still be fast with that. So this is a low, and then you will agree with me that this is a high. No, this is even very obvious. So this is a high. I'm trying to let you know how markets move. So this is a high in the market. This is a high in the market. And then the way the market moves is this. Market move from low for an uptrend to a high, and then goes back to create a low that is higher than the lower low. Now, I don't want you to get that, I don't want you to get confused with that. This is a low, this is a high. Market will come down to create another low. But if you look at this low is higher than this low. And that's why we call it a higher low. That's why we call it a higher low. And then after a higher low has been created, what next did we see? We saw that the market went up to create another high, which is higher than the former high. So what does that mean? So we call it higher high. So an higher high. We call it an higher high. So this is how markets move. And then for you to have it go on and on and on, market's going to create a higher low, then a higher high. And then how did we know that this market is tired? This trend is tired. You can see after creating a higher low and then went ahead to create a higher high, we are supposed to see a higher low, which we actually saw. But then this market is not creating a higher high because the high is creating is even lower than the previous high. And that's how you notice a tired trend. Look at this. This is the highest high here. For us to have a continuation of the trend, we are supposed to have a high that will be higher than this. So this is supposed to go and create a high somewhere here. But what did we see? We saw that market created a high here, which is lower than this high, and eventually came down again to test the low that we had before and a little bit below it. If you look at it, price touched somewhere lower than this low. You know, this is the lowest point here. Now price touched somewhere lower here, you see, and then went up again, the same place, almost the same place, you see, that it created here. And then so we can see that price is struggling to create a higher high, and then we see that price is tired, the trend is getting tired. So that is not a confirmation that the trend is going to turn, but it's telling us that the trend is not as strong as it used to be. But then if you now look at other facts that we have, see this channel that we drew here, that is the trend that we drew, we saw that now we know why trend is getting tired here. Why? Because we have two reasons: the trend line and then a key level. You know, a confluence of the two is getting the trend tired, and so we can anticipate a change of trend. That is, we can say that okay, maybe this trend is going to fall, maybe price is going to fall from here, just maybe. I mean, we are just maybe, just based on what we are discussing here, just maybe price may turn from here. So that's just an example. Let's look for something else okay, let me use this as an example. This is a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. Then we saw a low that is not higher anymore, and we saw a high that is not higher anymore. So what did we now see? We saw a high, a low, a lower high, a lower low, meaning that this is already forming a downtrend. Now, you might need to watch this video over and over and again to grab this, but once you master this, you have mastered the most important thing in the market. And you know, everything in this world works with structure. Once you understand the structure, you understand everything. So for structural engineers, they know that once you understand the structure of this thing, you understand almost everything about this thing. Let's do for something else. Let's do for another. Okay, look at this. A low, a high, a higher low, a higher high, a higher low, a higher high, higher low, higher high, higher low, higher high, and we can keep going. And then after this, what do we see? Price came to retest the low. It didn't create a higher low. It created almost, in fact, a lower low, say, because this low is even lower than this particular previous low. And then let's even say this was a mistake. At least it should have gone and create a higher high. But price did not create a higher high. Price went back, you know, had price a little bit less than the high that was previously created. So can you see this is already falling? Because this is where price is. Price has touched here and then fell. So in patterns, we call this double top, but let me not confuse you. We'll get that. We'll get to that. We call this double top, and that's one of the signs of trend reversals. When price keep touching its own and creating different scenarios around that point. Look at this. Price went down, touch this place, went down, touched it again. So, creating different tops. So, which pair was I discussing? I think this. Aha. So, price could not break higher to create a higher high. So, this trend is tired. It's obviously tired. Let me look for, okay, maybe we should use this. Look at this. This is a high. This is a low. This for a downtrend now. A high, a low. Then we have a lower high, because this is a high, a lower high, because this high is lower than the previous high. So a lower high, then a lower low, a lower high, a lower low. So a lower high, we are supposed, if this trend is going to continue, we're supposed to go and see a lower low. But we know why this is happening. Why? Because we are at a zone. You can see how all of these things work into, we've started by doing zones, key levels, and all of that. Can you now see how those key levels and zones affect market structure? Because markets must react at different key levels. There must be a reaction. If there's no reaction, then the place is not a key level. That is the truth. So let's look at another example. Now look at this. First, let's even look at a wider image of this. A low, a high, a higher low, a higher high, okay, a higher low, higher high, this is higher high, then we have a higher low again. So if this is going to continue as an uptrend, we're supposed to have a higher high. But what did we see? Market broke down and fell like water back to where it started from. Back to where it started from. So whichever time frame you open, you can always see this. We can go down to 5 minutes or even 1 minute, and we'll still see what I'm talking about. So even if we go down to 5 minutes or 1 minute, we'll still see what we are talking about. So it is not time frame dependent. We can even see it on a monthly time frame or weekly time frame. Whatever time frame we want to do, we will surely see it there. Now on a weekly time frame, you can see that market is obviously trending down. See, T is a high, a low, a high, a low. You can see market is trending down, and then we can see from every indication that market is at the edge of that trend line again, and it's ready to fall all the way down. So when you start, I challenge you to start doing your own analysis also. You understand all of these things better, and you'll be able to understand how markets move. You might need, like I said earlier, you might need to watch this video over and over again to really grab the wonder and the miracle behind this whole thing. But once you understand it, believe me, you already understand the market. Because this is the basic of how market works. This is the basic of how market works. This is market structure. And once the market structure has been understood, then you have everything understood. You can tell where market is likely going to go next. It is that simple. You don't have to be a wizard. You don't have to have MSc in financial analysis from Harvard before you can do all of these things. It is this simple. It is, of course, if you have an MSc from Harvard, it's another advantage. So let's not in any way talk down and anything like that. But I'm just telling you that it is not rocket science. It is not for the special people or so. If you give yourself to it, you will understand it. So before I move any further, let me open the floor for question so that I can answer any question that arises from today's class before we see if we can push this a little bit forward. So I'm waiting for your question. At this point in time, I'm waiting for your question. I'm waiting for your question. I'm waiting for your question. At this point in time, I'm waiting for your question. Now, while I'm waiting for that, let me also quickly address the question on the group chat talking about, two lines on a chart. Now, one is buyer's price, one is seller's price. So just like someone said one is bidding price and the other one is asking price. Another person said one is a buying price and the other one is a selling price. So we are all right. So if anytime you need to initiate a trade, you will see that there is always buy and sell, and the price is not always the same. Let me show you what I mean. You can see here, sell is 14320 and a buy is 143,362. So this is the prices we are talking about. They are not always the same. It's as good as saying that let me use this practical example to illustrate it. Going to Bureau de Change or any all these people that do exchange of currency. Now, for example, if you want to exchange 50,000 naira to dollar, if you want to exchange 50,000 naira to dollar, they will give you the price they are selling their dollar because you want to buy dollar. But if you want to sell dollar to collect naira, they will give you the price they are buying. So the price they are buying is not always equal to the price they are selling because they buy from A to sell from B. So the difference between the price is their own profits. I know you understand that already. So it is that simple. It is that simple. The arbitrage is very simple and the margin is very simple. So spread, swap, whatever you want to call it. So that is just what it is. So um, do we are we saying that there's no question based on class, based on what we've taught tonight? Are we saying there's no question? Okay. I believe you've learned this already, and probably you've learned something new in addition to what you've learned earlier. So, okay, if you don't have question concerning this class, do you have a question concerning any class we've done or anything you've came across that you just want me to, answer in this class? Anything like that? I'm waiting for your response. Do you have any question from anything we've done in the past or anything you came across, maybe while doing your charts or probably while reading a particular book or so? Any question at all, please? So, in the absence of questions, okay. So, in the absence of any question, please permit me to call it a day. And then before that, let me say this. Now, after the next set of classes, we will start having practical sessions, which we will have to make happen during the weeks when market is open. But then we'll need to take a lot of trade because it will be a full week of trading, and then we need to find a way to make it work. So, um, because many people are not in this class tonight, it is now your responsibility to get it across to them. Please, after this class, let them know that after the next set of class, we'll be having practical sessions. Of course, I encourage that, with what you've learned so far, go on chat, take trades. It's a demo account and you have nothing to lose, but you have everything to gain from knowledge to experience to every other thing. So, just go on chat, take trades. Don't be afraid to lose money. It's a demo account by and large, so you have nothing to lose, but you have everything to learn and to gain. So, thank you for attending tonight's class. Do have a great week ahead.